Welcome to Face the Analyst. I am your host, Jay Taylor, and I'm really pleased to have with me today Kim Harris. She's the President and CEO of Midlands Minerals Corporation, as well as Tom Nealons, who is the Vice President of Explorations of Midlands Minerals. Welcome both of you to Face the Analyst.
Thank you, Jay.
Thank you, Jay.
Really good to have you. Kim, you and I have spoken many times before. I'm somewhat familiar with your company. Your primary project is in Ghana, actually, and I think you have some other projects there as well. Tom, you're new to the company. I think you've just recently joined. Just recently? How recently?
November 11th.
Well, it's really good to meet you as well. Let's start out by asking, your flagship property is called the Cyan, I believe. Kim, would you tell us a little bit about that? This is a former producing mine, I believe. Can you just talk about the history of the Cyan, perhaps?
Midland's flagship property is Cyan. We actually call it Cyan Praso because there's a neighboring project that is contiguous that we also own, and the two are joined at the hip, so to speak. Cyan is a past producer. It's got about just under 600,000 ounces right now in a resource on the project. It has all the infrastructure in place. We have a mill, an existing CIL mill there, that can be renovated, refurbished for a price. We've already done a scoping study on the mill to see how long it would take us to get that up and running, and we've got a 6-month time frame on that. Cyan has a 30-year mining lease, and all the villages were relocated by the previous owners, which takes away a huge risk from us, and also makes the project very, very attractive. So taking it back into production would really be at a grossly discounted price because of all the things that are already in place. The power is there, the transformer is right on the property. We have water, all the sewage is in there, the buildings, sewage treatment plants are there, water. We have all the buildings in place, and people as well, skilled people that were working for the previous owners. So Cyan is a fantastic project, a lot of potential, with 600,000 ounces and counting. More drilling has happened since the numbers were calculated in September. And we believe it's a multi-million ounce deposit on Cyan Praso.
Now, I understand you have had a scoping study, so you do know something about the economics of the prospect, of the project. Could you give our viewers a sense of what the economics might be, what cost per ounce might be? I know that it will be subject to further studies, probably a feasibility study before you go back into production, but just to give our viewers some sense of what the economics might be for the project.
Well, the previous owners, Cyan Goldfields, were operating the mine and mining, open pit mining from 2000 to about 2003, the end of 2003. We took over the property in 2006 in October. And during the time that they were producing, they were recovering 93% at an average grade of 2.3 grams per ton from their production. And the cash cost for producing an ounce was $250. The plant was manual for the most part. It was labor intensive. And there are many efficiencies that we could introduce, but they got into trouble partly because even though they were producing an ounce at $250, the price of gold was much below that, and they couldn't make ends meet. So in our case, I would think that with all the changes that we would make, that have been recommended by the engineers who did the scoping study on the plant, the CIL plant, we likely would be looking at somewhere between $400 to $450 an ounce, which would be more or less standard with comparable operations in Ghana.
Okay, now that will of course be subject to further studies, and you know, life continues to change, costs continue to change, so we want our viewers to be aware of that number could change, and it's not cast in stone but subject to further work. I think you've said that you need to have perhaps 1 million ounces to get into production. You need to be able to count 1 million ounces in a 4301 resource. When do you expect you might be able to get there, to get to that threshold?
Well, 1 million ounces, we're using 1 million ounces because we want to have a viable operation. We've had a lot of people talking about production on Cyan because all the other pieces are there. And it's just really, we've got the resource, we've got all the other pieces that we need to get into production. The issue here that I see is if you're going to go that far and make that huge investment, even though it's not dilutive to shareholders because it's project financing, you still need to know that you have sufficient resources to give that mine a life of, say, 5-10 years or something beyond that. So that's why it's important for us to get that resource to back up the operation.
All right. Tom, I would like to ask you, perhaps, could you speak to the upside potential, the exploration potential? Kim just mentioned that Midlands feels it could be a multi-million ounce project. Could you talk a little bit about the exploration geology? We have around 600,000 ounces, Kim, you said, from a certain portion of that project. Could you talk to the potential, perhaps the strike length or the size of the drill targets that you might be looking at?
Yeah. We have a lot of prospects to the south of Asasi prospect, and they have a few drill holes in them, and they have never had the attention that they need. And this is so as a result of the complexity of the structure. Right now we're doing more infill soil sampling at 100-meter line spacing to get better understanding of the structure. But we're looking at I think easily getting that extra 400,000 ounces because we have a lot of present targets that have been drilled.
And before we started this interview, we were just chatting a bit, and you talked about, in your view, you think it's likely that 1 million ounces exists there now with a different interpretation of the model. Could you talk to our viewers about that? There's an intersection of two trends there, northeast trend and the Obuasi east by northeast trend. And south of the zone, there's a lot of good geochem anomalies already. As I said, we've tested them, and there's lots of potential right there in that area where the two zones intersect. Okay. Kim, you also have other prospects in Ghana and I think in Tanzania. Could you just maybe take a minute to tell our viewers a little bit about the other prospects that you have?
Our second priority in Ghana is a project called Kaniago, and it sits on the Asakangra belt, which is to the west of the Ashanti belt. It's quite an interesting project because it's unlike Sian and Praso on the Ashanti belt. It is quite straightforward in its geology and has been not as difficult to interpret as Sian and Praso are. And Kaniago has given us some amazing soil results. It's given us some very, very good targets. So we're in the process right now of preparing the drilling for that Kaniago project. It's right contiguous to, it sits next to Obotan to the south. Obotan was owned by Resolute. It's now owned by a Canadian junior called PMI. And to the north we have Abore, which is also owned by PMI. And we're very, very pleased to see the results that they've just released from their drilling on either side of us, and on structures that are on strike right through our Kaniago property. So I think when we drill Kaniago, we're going to get some very, very interesting results. And it could be the surprise that the company has been waiting for some time. In Tanzania, we have the Itilima project, which is on trend with Barrick's Bulyanhulu and Geita. That project is about 18 months or so from a resource. It's ready to drill. Again, we've drilled it twice before, and it's a matter of allocating adequate resources to it. We've also acquired some new projects in Tanzania that are on strike with Canaco's new discovery in Tanzania, which is getting everyone very, very excited. And our Tamota Kilindi project is on strike with that. We've actually got a press release coming out shortly on that project. So we're excited about our portfolio in Ghana and Midlands portfolio in Tanzania. And all of these projects, it's a matter of adequate financing to move them all up the food chain.
Sure. Well, it sounds like you have a lot of very exciting prospects, Tom. Have you been on the properties, on some of these other properties? I know you just recently joined the company. Are you familiar with the geology on these that Kim just talked about?
Yes, I spent a month at Sian while we were drilling, and they're quite interesting. The model is porphyry in structurally controlled environment, and it's very interesting.
So it could be quite large, I gather. They're porphyry systems and so forth. Yeah. Kim, let me ask you, it seems to me that I think of you more as an exploration company, yet you have an advanced stage project that could go into production. Do you see Midlands as a producing company or an exploration company?
I think Midlands is an exploration company. It doesn't preclude us from getting into production. We have to find the right partners and the right skill sets to run the CN operation once a decision is made to go in that direction. The vision that we have for the company is that the exploration part of Midlands continues exactly as it is doing, which is finding more ounces. We believe it's a multi-million ounce deposit, so finding a million on CN only just allows us to get thinking about production. It wouldn't be stopping our exploration activities. We would still keep going.
Why, let me ask you, what do you think for investors that come in and buy your shares at their current price of around 24 cents, I believe, somewhere in that range, what do you think the biggest risks they would face right now for investors that come in and buy your shares at these levels?
Well, the first one is the markets. If markets crash, we won't have much to do with that. That would be affecting all of us, not just Midlands. But the risk from the point of view of something that we can have control would be, when we go to look for financing, whether that's forthcoming or not. The risk that we may have the best exploration program on paper, based on all the information that we have and the knowledge that we have, and go and not find what we thought was there. You can drill with a diamond drill, which is 2 inches in diameter, and miss something that is just 2 feet away. So there's that risk of, you just don't know when you're drilling. The other risk is, I guess, the market expectations.
Okay, let me just ask you before we end our discussion, is there anything else you think our viewers should be aware of with respect to Midlands?
I think our viewers should be aware of that Midlands is one of the most undervalued companies out there. I know everyone says that, but in our case we are undervalued when you look at that we have ounces, when you look at the properties we have close to production, and it's a good buy. This is the right time to load up on Midlands, because once we get going and all the results we're discussing now start coming up before that June 43-101, the price will look quite different than it looks right now. So it's a good buy. I would recommend it highly.
Well, with a market cap of $23 million, more or less, and with 600,000 ounces, probably, hopefully soon, to 1 million ounces, with more upside potential beyond that, with other properties too, it would seem to be a lot of potential value that is waiting to be unlocked there in Ghana and Tanzania. I want to thank both of you for sharing this story with our viewers. I think it's a very interesting story, and I hope that they'll go to your website, which maybe you could just tell. What is your website?
Our website is www.midlandsminerals.com, and our email address is info@midlandsminerals.com.
Well, thank you very much, both of you. Kim, thank you very much.
Thank you, Jay.
Pleasure to meet you.
I hope it's not the first time.
Best of luck.
Thank you.